I want to talk about an opportunity on the Pound Aussie that I took. As I say, I've got many different strategies, many different approaches to different markets, all rule-based, and I have certain discretionary levels in certain markets that allow me to approach and trade slightly different to others, depending on the situation. I have discretionary levels that I look at, discretionary price points. I have different dynamic aggression and conservative approaches to, depending on what filters are there, what confluence is there, as you guys know. And before I take a look at the charts, I'll just show you this. This is the Pound Aussie. So you can see the Pound Aussie on the quantum screener. Okay. When you click out and go into the seasonality, you can see we've got this nice bullish run here, right? So looking over a 30-year period, the correlation of price to that 30-year period and that seasonality right now is 73.1%, which is great. And you know, you can do all the usual stuff like bringing on additional seasonality. I'm not with the Pound Aussie. I'm very, very conservative with it. It has to all be on my way or no way. You know, it has to be the highest probability setups. But if we look at the, if we go and look at the chart here, now this is the daily time frame, and what we've been doing is we've been in this structure consolidation zone where we're moving sideways. The moving averages are kind of just constantly crossing each other, so there's no kind of firm direction in trend. Yes, we've hit this high up here, right, and we had that rejection. We've kind of been moving sideways ever since. So, you know, in theory, we could be at a rotation zone. We could start seeing a move to the downside. But there's one discretionary level that I look at, and that is the 2050 zone. So if you look at where we're trading right now, we're at that 2050 level. And if you look historically, not just now, but you look historically, you're going to see that every time that level's tested, you can see here, you can see here, this is a bit broader. We had this big spike, but you can see here, right? If you zoom out and you go back in time, you're going to see that every time we hover around this level, we start to respect it, okay? And to my discretion, over the years, I've built up a nice little bit of confidence in the support of this area once it's tested. Now, what's happened recently is we had this test of support here. So first of all, it was resistance on the way up. Then it was support, right? Then we had this rejection here. Then we came down again and it was support again. Then again, right? And now we're here again. So this is the last chance for me to take this consolidation, this structure consolidation long. And I'm not going to be shooting for the moon. I'm not shooting for the highs for targets. What I like on this pair is, one, I have to have high probability set up, okay? Two, I have to have a minimal risk on the table. Three, I have to have a great reward to risk profile, okay? And if we could get a great reward to risk profile without having to shoot for the moon and still get that high probability move, then that is a win-win. So what I can do now is drop down to the trading time frame and start looking at ways to get in. So if I just bring on the 4 hour, what we did is we pushed right down to an oversold condition. Now, conventionally, an oversold condition is 30. Okay, we pushed down to just above 20, right, on this case. And then we had this really nice divergence on the RSI. So if you look at the RSI here, you had this nice divergence here as well. And we had this retest. So we had this initial test of price, had a really nice rejection, a doji candle. Then we pushed back up, pushed back down, and we had this rejection here. Okay. Remember, trading, successful trading, profitable trading is all about patience. It's just about patience. It's having the patience to look at this stuff as it's playing out and not have the urge to get in. You have to wait and wait and wait and wait and wait, right? And what happened is we pushed down, we had this rejection here. Now we're hovering around that level and we had the divergence on the RSI. It's great, right? So what does that mean? Well, it means that it gives you an opportunity on the completion of a double bottom, which is, you know, technically here or here, you know, depending on where you got in, That is completed, and now you can just get in, right? You can get in next bar market. Now, fortunately for me, this is one of my discretionary levels. So I have certain price points marked down in my little journal here on different markets where if price tests that level, I can be a little bit more aggressive on the entry, but I still have to have those, minimal risk, great reward to risk profile, more than a 2-to-1 on this particular pair and the pound yen. And I like to, I like to be a bit more aggressive on the entry, but still be conservative on the target taking and the risk management. So on this double bottom, I got in at a better price, came in, price was trending down, got in at a better price, still haven't violated the lows, got a tight stop loss, an ATR below the low, okay, and that's also below the low of all these previous lows, so that's nice bit of breathing room. So I'm essentially risking £2,160, okay, to gain £6,746. So that's a really nice reward to risk profile. If we bring on our long position here, you can see that we are, we are 3-to-1, right? Just over a 3-to-1, probably just under a 3-to-1 with front running, but we're a 3-to-1, so that's a great setup. You'll notice where my targets are, right? I'm not being greedy. I'm going just before this inside structure support level, okay, which also coincides with this pregnant pause, this indecision here, right? I want to be before all of that. I want to get out before all of that. And most importantly, if we look left here, you can see all this previous resistance. I want to be below that, right? So I've just gone below this this resistance here. So that's increasing the chances of my target being hit because there's less stuff in the way. And then there's more stuff in the way for my stop loss. Yet I'm still maintaining a great reward to risk profile, 3-to-1, right? Got the divergence there, got the we're struggling to break this low, which is a great signal. Now, of course, this might just blast through, and this is the time where we see the full rotation, and I'm wrong. But, this is rules are rules, and this is the trade that I'm in. So I'll keep this going, and I'll show you guys, I'll allow you to follow along, see what happens, and hopefully we can hit targets on this week. Ideally today, but if not, maybe tomorrow. And we'll see. All right, I wanted to give you an update on this trade because this trade I took a loss on. It went against me, but look, I thought it'd be really valuable to show you what happened and also share some kind of insights on what happens, how we manage not only the loss, but how we manage emotions as traders as well. So you can see, the first thing you can probably see here is the move actually went in my favor. The move actually not in my favor. So what you can, first of all, what's really obvious here is the move went in the direction I predicted, right? And my target was here, and it'll be interesting to see what happens with price here, because I always talk about optimizing targets as much as orders, like entry orders. And what we're likely to see is a rounding off here now. So you want to get in, get out, you want to take your profits at optimal positioning. But I lost on this trade, and the reason I lost is because I just didn't give my stop loss enough breathing room. My stop loss was a tight ATR below the lows, and I just got stopped out, and then price went against me, and went in my favor. And that stinks when that happens, to be honest. It's the worst way to take a loss. If you want a loss, you want to be out quickly, like a Band-Aid, rip it off, and you want to be out, and you want to be really wrong, right? So the market wants to tank following hitting your stop loss, but what it actually did is I was right on the move, but I just didn't optimize my stop loss. And that's another reason to optimize all orders. All orders are orders, right? So I know you want to be right on the entry. You also want to be right on the stop loss and right on the target, all right? Because you're going to lose more trades if you're not optimizing your target taking, meaning you're shooting for a target too far away. You basically want more stuff in the way between your entry and your stop, and you want less stuff, less resistance in the way between your entry and your target, and you have to optimize for that, right? So this is a losing trade, right? Now the reason I don't care is because I trade this strategy time and time again, and I know that this produces about a 58% strike rate, which means 4.2 times out of 10 I'm wrong on this setup. And I know I'm wrong on this setup, but it doesn't matter because the reward to risk profile is so great. But I wanted to share this with you because, one, it shows that, you know, I don't only post winning trades because that's no help to anyone. I've just come off of a really good winning streak this summer, five and a half week winning streak. So I know I'm bound to take some losses. It just so happens that this one was a bit of a stinker. You know, I was right about the prediction, but I just didn't give my stop loss enough breathing room. But now we can take this information, you know, when you collate the data and you journal your trades, this then becomes your new backtesting. And then every 6 months, every year, you can go through and optimize and tweak and, you know, enhance the performance of your system by going, oh, hang on, every time I put a stop loss at an ATR, you know, I get stopped out and the price goes, you know, in my favor after that. How many times does that happen? You know, what pairs does that happen on? What price points does that happen on each pair? And you can start to really refine that. But that is a process that takes many, many years. It's not something you can just do quickly. You have to earn that discretion. And it's a bit like you don't want to change too much at once because then you don't know what you changed that worked, right? So you have to get the data and slowly over the years you have to tweak and optimize your performance. So trading is a long game. So I hope you found that valuable. Let me know in the comments if you did. All right, just a quick add-on to this video because loads of you have been messaging about the bat formations and the ratio patterns that we put out on a video that I'll put up in the corner here and in the description. But lovely little bat pattern we took on the Aussie CAD yesterday. Really pain-free. Entered, dipped down a tiny bit, had to adjust targets very, very marginally, and then that one just shot through targets. And the other one that I'm in right now is the pound. So this is the pound dollar, and those of you are fans of bat patterns since that video that I put out, X, A, B, C, D. This is a bat pattern setup where I got in just as conventional rules, almost pushed up to target, pushed back down, hovering around, but hopefully we can hit targets on this one as well. So if you want to learn more about the bat patterns, go and check out that video if you haven't already, or if you want to learn these patterns, tier1trading.com. See you in the next one.